I don't think they are in early stage. For instance, this is our 19th year in 19th year in the asset management company. We have nurtured it for so many years. This is a long-term business. You have to put strong foundations and make them grow. The growth was less in early days, and after demonetization, we've suddenly seen a spurt in savings, and many reasons are there. Many reasons are there because other avenues of investment are less now. Gold is no longer an option because there are 5 years there's been no appreciation in the cost or value of gold. Real estate has not grown much, value of real estate, and rental yields have come down, bank deposit rates have come down, and post demonetization we saw a flood of money coming into the mutual fund industries, and we were one of the beneficiaries.
What I meant to ask, sir, was that in the cycle of a business, asset management is gaining size. Your company tremendously benefited in 5-7 years gone by, and insurance too is being taken as much more seriously now in last 5 years than years before. So I was wanting to, in your eyes, a comparison in the cycle of these two businesses versus the way big cycle in your mortgage.
They're no longer teenagers. Banks. They've grown up, they've matured, and they're ready to face the public. Up to now, they had 2 shareholders. Now let them have 200,000 shareholders. Sure. Let them face the public.
Mr. Barve, this is clearly a business where winner takes all, and you've been, you've worked your way up as a large winner in the industry. How are the dynamics there, and competitive landscape is something I would like your comments on in the asset management business.
So yes, the industry is extremely competitive, and in some sense we are being evaluated sometimes even every month, every quarter on investment performance, on flows in the industry, and so on and so forth. But I think that only keeps us on our toes, and there's nothing to complain about an industry being competitive. We should expect competition. Competition sometimes tells you a thing or two that somebody else might be doing a little better than you, something to learn from. So we have a healthy respect for competition. I think the fact that there is the industry landscape is competitive actually keeps us on our toes. So, and it helps and pushes us to sort of push the envelope on growing the business. And I think the industry is very transparent in the first place, like all numbers are published monthly or quarterly averages, fund performances are available for people to see. We have monthly fact sheets where information is available of what we hold in terms of the investments under each of our products. So I think the industry is a very transparent industry. It's a very competitive industry, and it is something that is always looked at and looked very closely and commented upon, which is a fair thing to happen in an industry like that, because we are in the business of managing investors' money.
You have managed, you were discussing in your presentation, managed to compress costs, still improve your margins. Yeah. The way we stand now, do you see there are more levers available to continue that process even from here on?
Yes, I think we should be able to maintain the margin, and if possible increase it in the last year. I think the key is that we have a product mix which is profitable, which is more biased towards more of equity assets as compared to debt and fixed income or liquid funds. So basically we need to focus on high margin equity business, so that is where the revenue comes from. And the control on the cost is something that's almost part of our DNA. So we will continue to manage cost very, very tightly. And that's been something that we've been able to demonstrate when we are either maintaining margins or we have been able to improve margins. So when you talk of these 1 or 2 basis points, they might appear 1 or 2, but they are very significant numbers in absolute amounts.
Mr. Parekh, you're also somebody who's really seen the evolution of financial services space in our country in the last couple of decades. Where do you see asset management as a business go, say, over the next 5, 7, 10 years, as a percentage of overall financial services? You started off private banking and mortgage when it was a new, overall new trend, and see where we are overall in the industry. It is more than 50% is mortgage and private banks. So in that light, where do you see asset management go?
If you see the penetration level, assets under management of all mutual funds put together as a percentage of GDP, we are very low. We are 13%. China is 40%, 3 times more. And we are not, we are far behind from China, but not that far. Developed countries, it's much more. It's 70, 80. Global average is 62. Global average of assets under management as a percentage of GDP is 62. India is 13. So I see that 13 number go up to 30, 40 in the next 5-10 years. Even equities, out of 1.2 billion people in India, only 2% have equities. This is one of the lowest numbers in any country, that only 2% of equities is owned by a large population. It's very low. Similarly, equities as a percentage of market capitalization, India is 4%. So 4% of equities, of all equities listed, are owned by all mutual funds put together. And here again, the average is huge, much higher. So you know, in every parameter you look, consumption credit, you're talking of mortgages and consumer finance. Consumption credit as a percentage of GDP are tiny compared to our global average. Even compared to Thailand and Philippines and Malaysia, we are low. So, you know, consumption is driving Indian economy today. Middle class, growth of disposable income, urbanization is happening in a large way. Jobs are being created in the IT sector. People are buying, consuming, and they will have savings.
Right. Mr. Barve, if this is exactly how things actually pan out over the next 5-10 years, the industry becomes 10 times from here. How would the shape of the industry be? Would it be an oligopolistic play, or there would be bulk of the business will be in top 5 and there would be 10-15 players? What is your assumption? Or you think consolidation will happen and bulk of the business will be in top 2-3?
No, I don't think there will be consolidation to the point that business will be consolidated with just 2 or 3. The already top 5 of us are almost 50-52% of the market share in the market. It's fairly concentrated in the top 5. So going forward, I would expect the trend to be somewhere similar, because that's not changed in the last 4 to 5 years. I can't see a strong reason to believe that the trend will change. But over a period of time, over a very long period of time, maybe actually the ownership or market shares will become a little bit more dispersed. Right. So it may not remain as concentrated in the top 5. So which is a natural course where if you see a well-matured industry in any of the industries in financial services, you will not have top 5 holding 50% market share.
So which means that broadly your business model would be to keep increasing the assets under management, and the quality of asset will be tilted towards equity because they get the profit, and your margin percentage would be same, so that absolute keeps on trickling more down to the bottom line over the next 5-7 years.
You're absolutely right. Basically, the revenue depends on how much of your total business is coming from equity business, and if that is a reasonably good proportion, that it helps the revenue. The costs are something that is a separate thing that we need to manage and contain on a continuous basis, irrespective of the product mix, and that's something that we have been able to demonstrate consistently.
So just one word on the rate cycle in our system. We saw rate falling cycle, then some bump up. Do you think it's a temporary bump up, or we are in a rebound mode?
Well, the rates really depend on inflation, and inflation is the key factor in determining the rates. And RBI will look at inflation now. Let's see how the next 1 month, 2 months monsoon pans out. Okay. If it's a good monsoon, people are expecting it. This is the 3rd year of good monsoon with bumper harvest. And if we have a bumper harvest, who knows what will happen to interest rates? Inflations will come down. Food inflation, fuel inflation is there today because oil prices have gone up. But food inflation can be controlled, then again it would be a good thing for India as a whole.